Good morning, everyone. Welcome to day 2 of our quick start training. Welcome. Glad to see so many of you in here in the room. Before we start, I want to do a quick mic check. Make sure you all can hear the sound of my voice. Please type a 1 in the questions box if you can. All right, excellent, excellent. So I'm sure yesterday, I think I got my computer issue squared away, but I will be switching computers later today, but I think this one will be all right for the duration of this broadcast. Thank you all for your patience yesterday. So today we're going to take a look at the full suite of indicators with Pro9 Trader, as opposed to yesterday, the more simplified and streamlined core chart, which does let you identify 3 of the trade setups very quickly. But we'll see the difference and contrast with the full suite of indicators and how we can better anticipate the trade setups and also catch quite a few additional trades with the full chart. So we're trying to restructure the class. So for the first hour, I'm going to focus on the trade setups. And then the last half hour will be the period I'll cover questions. So if I don't get to your question right away, don't worry, I will scan back and try to catch all the questions. If you have a question about a particular trade I may be discussing and you want to review that, just make sure to put the market and time of the trade in Eastern time, because that's what my charts are set to. And that way I can quickly scan back to that particular trade setup and we can go into it a little bit further if we need to. All right, let's hop right into it, and we'll just start with the chart I have up, which is the NQ. So things do look a bit choppy today. Not a ton of movement, but that's going to happen sometimes. And sometimes it can happen for a while. Markets do go through periods or slumps, I guess is a common term. And so really the only thing that I can really think of to do in this time is really pay attention to choppy market conditions, and also just be open to the idea of having options. I know some people, that's what I meant is the YM. If I misspoke, I apologize. We are looking at the YM today. I do know some people kind of stick to one market, or they're one market trader, and we all have our favorite markets for whatever the reason. But I mean, I think it's good to have options in case we have a day like this in the YM where it's pretty slow. There's not a ton going on. We did have a couple qualified trade setups, but outside of that, you don't want to watch a chart for 8 hours and see this. Wait, let's see. Yeah. So, just throwing it out there. It's not a bad idea to at least have a couple markets you're willing to look at in case your favorite market for the day is slow. But despite it being slow, we still do have some qualified trade setups here. And before we get too far into it, something I like to iterate. It's very important, so I do cover it before every class, as it has gotten some people into some less than ideal trading situations. And this will be our market news. And we can see today there is a ton of news. So, and I did speak about this yesterday. For anyone who wasn't here yesterday, we are concerned with news events with a red, black, or green dot next to it. For any of those news events, we do not enter into new trades 5 minutes before or 5 minutes after news. Today, in particular, we have this trade or this news situation where we have news at 9:45 and 10. So it'd be sitting out from 9:40 to 9:50, and again from 9:55 to 10:05. It's 5 minutes before and 5 minutes after each of those separate news events. So we do have this small 5-minute window that we could enter into new trades, but I'm of the opinion that we should just sit out that whole time and not try to chase a trade in a small 5-minute window that still might be feeling the effects of the news. So something also to consider. You may want to look for a trade in that window, but it's such a small period of time to try to hunt for a trade. And we've just seen historically that during those news times, or that 10-minute window surrounding news, that there's a higher frequency of qualified losing trades. So something to be aware of. We'd rather play it safe than sorry and watch maybe a few winning trades go by us that happen in news rather than take more losers than we need to unnecessarily. So our first trade in the YM will be a momentum trade. It's a momentum long. This is the trade with the least amount of rules to qualify. Basically, all we're looking for is our colored EMAs, our colored EMA background, or for our EMAs to be in the correct order. Whichever way you like. I personally like to look at the EMAs, just how I learned, so I'm used to that. I do like the colored background as extra confirmation, in case it's a little too close for me to tell, which may be the case here on bar 5. The 10 is right above the 20. So next we're looking for our momentum arrow, which to clarify, when we see a momentum arrow, it's not telling us that this is a momentum trade, as none of these indicators tell us that they're a trade set up by themselves. All of our trades have multiple rules, and we use the different indicators basically to confirm that the trend is going to move in the direction we're anticipating and that we have a high likelihood of hitting our profit target and possibly catching a runner. And next, for the momentum trade, we're looking for the blue line to be above the histogram, or for the blue line to be above the purple line. And I would like to clarify, as recently this has come up as a point of confusion for some who may have been with Pro9 for a while. We did update the language to now talk about the values, as that's what we're really concerned about. Initially, we had this, we called it cut through, but it seemed to be a bit more confusing than was necessary. So, and it's kind of one of these concepts that is hard to describe with precise language so that everyone will understand it the same. But we are always trying to look for ways to improve the rules so that they are as clear as possible. So we added this purple line to the direction histogram recently, as I think the histogram throws a lot of people off, as we do have this full body between the 0 line and the edge of the histogram. But remember, this is really just a visual representation of a value, and that value is dictated by this purple line. That's the value we're concerned about. This range in here is really just visual. So for long trades, we want the blue line value to be greater than the purple line value, or for the blue line to be above the purple line. And that's really as simple as it is. It's not more complicated than that. If the blue line is already on the correct side of the histogram, that rule qualifies. So we don't need it to come from one side to the other. That's not necessary. Just that at this particular instance, is the blue line greater than the purple line? And in this case, true. So we would enter this trade. Outside of the fact that this happens during news, it looks like there's just a lot of news around here. So then our next entry would be this one, which may not have hit profit target. It's pretty likely that it did not. So our entry price will always be a DPI, one of our DPI prices. In this case, the entry price would have been 250. Whoops, and the high of this bar, 257. So that one actually would have hit profit target, as we would have traded through our profit target, which will happen. You'll see that happen with momentum trades. It won't happen with the other trades because the momentum trade is looking for a 6-tick profit target. So you'll often reach profit target before the second bar closes, as opposed to trades with an 8-tick profit target. You would have to see 2 complete bars after your entry bar. So again, this one was qualified at bar 5, and the trend continued long, so nothing really changed. So this trade also qualifies. And again, our entry price was 250 or 20,050 technically. So we have our rules qualified, and we'll enter using our green DPI. And with the momentum trade, like all of our trades, it's 3 contracts, a 6-tick profit target, and a 15-tick stop. And after the first color bar plots, that's 4 ticks. So we're more than halfway to our profit target. I have heard from some members who use Pro9, they like to adjust from 15 to 11 after the trade moves 4 ticks in our favor. And that's fine if you want to do that, but I would definitely suggest kind of testing and comparing the two to see if that's really something that will work out. I don't think so. I think leaving it at 15 is ideal in the cases where we get a double wick or double tail, where the bar after our entry bar will have another long tail, which could come down 11, 12, 13 ticks. Of course, it could come down farther, but I think those are more rare than it just coming down about 10 or 11 ticks. So adjusting it, you kind of run that risk of getting stopped out sooner than we had to, or if we had just a little bit more wiggle room, we may have hit our profit target. So something to consider in that. So I stick just with the 15-tick stop until it gets stopped out, or until we hit profit target. And then after we hit profit target, somewhere up here, the bar reverses and would eventually stop out the runner. Because once we hit our profit target with 2 of our contracts, we want to sell those 2 contracts and adjust the stop on our runner to break even, which is the same as our entry price. So in cases like these where the run doesn't go on, of course the runner's going to get stopped out, but we've already extracted our initial profit from the market, so that's okay. The runner is there in case the market continues to move, so we have an opportunity to take part of that. Now that does not mean that every trade we enter will catch a runner, but we're never going to if we don't have that contract in there. So we had our first qualified momentum here, and there wasn't news again until 11. So we have a single T here, and this will be a good illustration of the differences between the single T and continuation. Now, I'm sure many of you have noticed that the continuation and single T rules are very similar. They are extremely similar trades, but there are some differences that are important. So if we'll look at the continuation rules first and then compare them against the single T. So our continuation trade is we're looking for only the 10, 20, and 50 EMAs to be in the correct order. So we're not concerned with the 200 off the bat. But like the single T, we are concerned with the blue line being greater than the histogram in the case of this long trade. We are also concerned with the super trend being outside of its neutral zone. Now notice in parentheses, this says not required if turn bar or first color bar has touched the 50 EMA. So if we see the turn bar come down if the tail touches the 50 EMA, that is a signal that we can ignore the super trend for that trade, because bouncing off the 50 is a really strong sign that we're going to have the momentum to at least hit our profit target. So we can disregard the super trend. And then we're looking for our turn bar, which is our entry bar, ideally. And we want to use the DPI that will create that bar. And I'll go over how we can use that after we look at this trade. And if we look at the rules for a single T, notice by default, we're also concerned with the 200. So we need all 4 of our EMAs in the correct order. We are again looking for our super trend to be outside the neutral zone, and also again looking for the blue line to be greater than the histogram value. And just like with the continuation, we can ignore the super trend if the turn bar or first color bar touches the 50 EMA at some point. But also with the single T, if we look down here at one of our bullet points, if the turn bar or first green bar touches the 50 EMA, the 200 is not required to be below the other moving averages. So we can see here again that bouncing off the 50 is a strong enough sign for us to basically disregard the 200 and the super trend for this entry. So it basically turns it into a continuation. But the differences of these setups is we will see a continuation will appear, we'll have a turn bar followed by a turn bar, or it will be a turn bar, color bar, turn bar again. And that turn bar would be our entry bar. In this case with the single T, we have multiple color bars in between our 2 turn bars here. So this is basically saying that the trend has reversed enough and then started trending long again, but it's been a long enough price movement in between those points that this can be considered a single turn bar trade or the start of its own leg. Whereas a continuation, the price reversal is very brief comparatively, and once we get that second turn bar, either immediately after the first turn bar or with a color bar in between them, it's basically just a continuation of the previous run. So those are the differences and those setups. So here for this single T, we do have all 4 of our EMAs in the correct order. We do have our blue line greater than the histogram. And notice here that the blue line did turn white. It will turn white as a visual indication that the blue line crossed from one side of the histogram to the other. Most times it's apparent, but some cases it will be very close, and it'll be helpful to have this blue line turn white, letting you know if you were waiting for it to get to the correct side. Seeing it turn white will answer that for you definitively. And I do want to touch on so let me cover the DPIs. This is a very important indicator and will help us understand what we mean when we say our entry bar. Kind of clear that up. So this is our DPI up here, our dynamic price index. This will tell us at what price a new bar will be created. So we can only have a few things happen. Either it's going to create a new color bar if it continues heading in the direction of the trend, or it's going to go the other way and create a turn bar. So those are the two options. So here we see the current trend is red, our bars are trending short, and we just hit the red DPI, and so it plotted another color bar. And then we have this new bar forming. So if it continues to hit the red DPI, we'll continue to create red color bars. And this will happen every 4 ticks if we're moving in the direction of the trend. If we move 22 ticks in the opposite direction, we will plot a turn bar, as that is the price movement we consider significant enough to possibly enter these trades. So when we talk about entering on the turn bar, we're talking about the DPI that created that turn bar. And when you see me looking back at the charts historically, you'll notice I check the bar before to find the DPI that creates the next bar. So 20,046 is the DPI price that closed this color bar. The reason we do that, looking back historically, is if we check this DPI box, let me move it down a bit so we can compare. So this is the most recently completed bar, meaning the next bar isn't completed yet. And we see that our DPI displayed in this data box is the same as what's displayed on the chart. If we look at the currently forming bar, DPI is not available because that will be for the next bar that isn't complete yet. So our most ideal point of entry will be the DPI that created the turn bar for the single T or continuation, dot trend, and divergence reversal. All 4 of those use a turn bar, or we want to enter with the DPI that created the turn bar. That's the most ideal entry for these trades. We can also, if for some reason we cannot get in on the turn bar, we can also enter on the DPI that creates the first color bar. And we may not be able to enter on the turn bar in some cases, as we may be waiting for one of our rules to qualify. We may have 3 out of 4 rules qualify on the turn bar, but maybe our blue line isn't on the correct side of the histogram yet. So we have to wait for the first color bar to confirm that. Now, if the trade confirms on the third color bar, that is a late entry and not a qualified trade. So these are our only points of entry for these types of trades. And we don't get in the middle of a run unless it breaches the high or low of the day for a breakout trade, or as we saw here, in the middle of a run with this momentum entry. All 4 of the other trades will only be entered either on the turn bar or the first color bar. And as far as retracements go, sometimes you will need to enter onto a retracement. There are times where we're just not going to be sure that the blue line is going to make it to the correct side. So we may need to wait for the first color bar to plot, just to confirm that. So since we're not sure, we don't want to enter ahead of time because we don't want to risk putting ourselves in an unqualified trade situation. So we may need to wait for this bar to close to confirm that our trade is qualified, and then attempt a retracement back to our original entry price. Which is okay. If that doesn't happen until the third bar is plotting, that's fine as well. And you usually get it on the third bar. After that, it gets kind of late and doesn't often retrace that far. But sometimes it does. And retracement entries go for any setup. So you can attempt a retracement on any trade setup. All right, so let's try to find some see what else we had cooking up. If we have any divergence reversals, I think I saw one. I would like to cover that since it is our only counter trend trade. Can be a bit trickier, but I don't think I see any today. Just give me a second here. All right, so I may just have to scan back and see if we can get one. But something else very important is choppy market conditions and how we can use these indicators to let us know when, it may not be the most ideal time to enter a trade. We can tell that there may be some indecision in the market. The price may be locked in a channel and it's just going to keep bouncing in a certain range and not really give us the movement to hit our profit targets. And so some things to look out for. If we look in this section, a few things you want to look out for. A lot of turn bars in close proximity to each other. So we see here more than 50% of these turn bars, or more than 50% of these bars are turn bars. So what is that telling us? That the price is just ping-ponging back and forth, and there's really not a lot going on. And there's not going to be good trade setups. Even if we see a qualified setup, it's likely too risky because we just haven't seen any decent moves. Let's look at it like this. Next clue is that our EMAs are getting roped together. So we see here the 10 is kind of above the 20, and then they do all kind of start wrapping around each other, right on top of each other. So this is telling us that there's really no clear trend here. And that confirms what we've seen with our turn bars. Next, we'd want to look out for the direction and super trend to be hanging out around their zero line. That's not always going to be immediately apparent and isn't extremely necessary to confirm that we're in a choppy market. It is an extra confirmation. But if we see it on a downward trend, or if it's returning to its zero line, we can consider that we're likely heading into choppy market conditions. And the strongest sign that we're heading into a choppy market is our blue line. Now, we really want to see this blue line traveling from our extreme zones here. It's above which the extreme zone would be this green line up here and this red line down here. We really want to see the blue line traveling fairly consistently throughout the day, back and forth. Here we get to a little period where we just kind of start hanging around the middle of the neutral zone. And that's really not something we want to see. That's usually the strongest indicator that we're heading into a choppy market condition. So, and another thing to point out is that, of course, we look at this and we can see, obviously, it's a choppy market. So, when looking at the market live, it's not always going to be apparent immediately. So, there may be times where we enter a trade, it ends up going against us, and then we recognize that, oh, I'm in a choppy market condition. I should sit out until I see signs that the market has returned to some better cycles. So, although we may take a losing trade initially, fairly often after that we can tell if we are in a choppy market. So in this case, there were no short trades. So we did see this entry here, right? This is a qualified entry. It is during news, so we wouldn't enter it, but for argument's sake, say we didn't have news here, and the news is likely the reason for the chop. But anyhow, we did have a qualified entry here. This would be a qualified continuation. Our EMAs are in the correct order. Our blue line is on the correct side of the histogram. Our super trend may actually not be, it is just outside of its neutral zone. And we have our turn bar. So for argument's sake, if we entered on this turn bar, right after that we would have been stopped out. But after this bar, even assessing this little area, see, all right, I'm starting to get more turn bars than I really like to see. My EMAs are getting kind of close together, and my blue line didn't really continue to where I wanted it to go. It's just bouncing around here. So right here, I would definitely be suspicious that we're in a choppy market, or we're heading into it. So I'd kind of want to just sit on my hands for a minute and see how things develop. And we do have a little short move, no qualified trade short, because our overlying trend has been long for the majority of the day, kind of, but. And then we see a few more turn bars, and then even after here, definitely going to sit out of the market. Not excited to enter a trade here, and I'm sure everyone can see why. But once we put these together and recognize that this tells us and that we can anticipate that sooner, from this point, it could save us some headaches, because we may have thought about entering a trade here, although it's not qualified. But if we saw another trade after that and ignored this, it could turn against us and we take an extra loss that we didn't need to. So we can definitely use these indicators to let us know when it may not be the most ideal time to trade. And then as we continue, now determining when we're outside of a choppy market can be a bit more difficult. So one of the things we look for is the blue line to head back to its extremes. That's usually the strongest sign we're outside of a choppy market. But another method which I'm a fan of using, and you may be as well, but I like to wait for a trade to succeed without me. I want to see a winning trade and have a better idea that the market is going to return at least to a clear trend, or some short cycles where these might not be the longest runs, but it lets me know that I'm likely to hit my profit target. So, and in this case, I do see a run go. It wasn't a qualified trade, but lets me know we're kind of getting back to normal cycles. And so here I have my first qualified trade, a single T short. I can ignore the 200 because my turn bar bounced off the 50. And my blue line is on the correct side of the histogram. And just to reiterate, I saw a quick question. When the blue line turns white, that's just a visual indication that it has crossed from one side of the histogram to the other. So if you're waiting for the blue line to be below the purple line, when it turns white, that's just a definitive visual cue that it has crossed from one side to the other. Sometimes it will be very close and not always easy to tell, but when it turns white, you can be 100% sure that it has crossed. And just to reiterate, this choppy market was during news time, or at least the start of it. So while we're sitting out for news, we may be able to determine that it's headed into chop, and we can sit out for a little while longer. Back to our single T here. So this would be the one I would just wait and see how it does. And it does go on for quite a while. So after it ran for this long, you may think about hopping in on this momentum, or even if you see it go and you're confident that we're out of chop, a breakout entry is also possible. So we'll walk through each of these, as this is a perfect example of how if we miss an entry, we do have a few other opportunities to hop into a trade. So here we have our single T. We would enter this trade with 3 contracts, an 8-tick profit target, and a 22-tick initial stop. And our entry price would be the red DPI to 1708.4. Now, after the trade moves 4 ticks in our favor, or after the first color bar plots, remember it takes 4 ticks in the direction of the trend to plot a color bar. Once it moves 4 ticks in our favor, we want to adjust our stop from 22 ticks to 18 ticks. This helps mitigate some of the loss should the trade turn against us from this point. And it also just makes sense. Our trade has moved 4 ticks, so we want to just kind of move with it. After the second color bar plots, that's 8 ticks, which is our profit target. So we want to sell 2 of our contracts off at our profit target and adjust the stop on our runner to break even. Now, depending on how you're managing the trade, if you're using an ATM, it can manage this for you. If you're trading manually, ideally, you want to adjust the stop on all 3 contracts to break even, and then sell your 2 contracts at your profit target. Just to eliminate the risk once you hit your profit target in case there's a very rapid reversal, as it's much better for a trade to end in a scratch than take a loss after we hit profit target, but maybe weren't able to sell the contracts fast enough because the order may not be filled immediately. A few things can happen, so we'd rather protect ourselves and take a scratch than not and take a loss. Now, we do say 3 contracts. Of course, if for whatever reason you're trying to build your account up, just starting out, you can start with 2 contracts. And you would manage it much the same way. You would just sell 1 at your profit target and leave the second one on as your runner and manage it the exact same way. So once we adjust our runner to break even, we're going to leave it there for a couple more bars. Now once the 4th bar from our entry bar plots, we can begin trailing at the high or low of the previous bar to start trailing the runner. And these gold numbers here will tell you the high or low of the previous bar at a glance, or the most recently completed bar. I like to say I think it's a little more precise. So if we enter on the first color bar, this is going to be bar 6. If we enter on the turn bar, it's going to be bar 5. And then as each new bar plots, we'll just adjust to the high of the bar. And then once the 6th bar from our entry bar closes, in the case of entering on the first color bar, that would be bar 8. Now we have the option of widening to the green DPI. And we may ask, why do you want to do that? We've secured quite a few ticks from our break even here. Why give some of that up to, what if we widen to the green DPI and the next bar is a turn bar and stops out, and then our runner's only gotten 2 ticks at this point. Whereas here, we had 9 ticks if we were trailing at the high of this bar. So we gave up 7 of our potential ticks. Fair argument, that is one of the things that can happen, widening to the DPI. But it does have the advantage of letting you take part in as much of the run as possible. A few things I do like about it is it lets us ride over any wicks or tails that appear on the run. And it makes the runner much easier to manage, I think, or just more simple as each new bar plots. We just adjust to the new DPI that's displayed. And if we run down this trade, we see that here is a point where we would ride over this, whereas if we were trailing at the higher low of the previous bar, we would have got stopped out. And then we might not have been able to enter this one. It's right on the 200. And this is a universal rule. You'll see it in the bullet points of our trades. It should be in all. I think I have an old version. I haven't updated my floating rules here. But we don't want to enter a trade heading into the 200 unless either our entry price is past the 200, or we have enough space to hit our profit target before hitting the 200, which is basically our profit target plus a tick. So even though this looks like it's just past the 200, yeah, so our entry point price is far enough past here. But if we wind to the DPI, we just avoid that situation altogether and continue riding this out until we hit this turn bar. The other option is trailing at the high of the previous bar, getting stopped out, re-entering, and then managing a new trade halfway through, which is fine. Some people like doing that. You may like it because it secures a more initial profit, I guess. But the way I look at it is when I'm in the trade and I'm trailing my runner, it's not my money yet. So it's still out there in the ether, the markets. So I don't want to get too attached to it. I'm already in a situation where I can't lose money. I've secured some profit, and widening to the DPI, I feel, gives me the best opportunity to take part in the entire run. Whereas trailing at the higher low of the previous bar, you are going to run into a situation eventually where, say we get stopped out here, we get our runner stopped out here, so we enter a new trade, hit our profit target, and start managing our runner. Then we get stopped out by another wick, and we hop in that trade as well, and then the next bar is a turn bar, so we take a full stop. And as hard as we've tried to find a way to avoid those, there's just not a way to determine when the end of the run is coming. So something to be aware of. There are pros and cons to each of those trade managements. And I don't think you'll see a huge difference in overall P&L over the course of, say, 6 months or a year. Maybe over a longer period of time, the differences might become clearer. But just from my own backtesting the system, I haven't noticed a huge difference. So, but something to keep in mind. But let's say we missed this single T entry, right? Dog was tugging at my pant leg, something happened, whatever the reason, can't enter this trade. Missed it, can't get a retracement. How can I be prepared to get in at another entry point? Well, I do notice that I'm getting kind of close to the low of the day. And we have a trade setup for that. It's our breakout. So I can see that here in a couple bars, if we continue on this trend, we're definitely going to break through the low of the day. So what do I want to look for when I'm suspecting a breakout is coming? If we look at our rules, one, we're looking for the price to hit the daily high or low. Well, it hasn't happened yet, but we're on course for that. So I'm definitely considering this breakout trade. Next, I'm looking for my direction to be outside of my neutral zone. Our neutral zone is this gray or this gold area in the middle here, which is at -50 or +50. So my direction histogram isn't quite there yet, but I do have a couple more bars before I hit the low of the day, so it may get there. But I definitely want to keep my eye open and just watch how this setup develops. And that's really all we need to look for a breakout. We also need to make sure that we're not past bar 10 when the price breaks through. In this case, we're not going to be. It looks like bar 5 or 6 will be the breakout bar. So as long as we enter the breakout before bar 10, we can enter that trade. And then to prepare, my entry price is going to be one tick below the low of the day. So we can see what our low is. It's 1707.3. So I know my entry is going to be 1707.2. So I can be prepared to put my stop limit order in the dome as soon as I confirm that this will be a qualified breakout. The next bar plots, I see my direction histogram is getting a bit closer. It's very close, and I anticipate that it's going to get to where it needs to go at the close of the next bar. We may need to wait for confirmation and attempt a retracement. Either way, if it's already outside of the neutral zone, we can put in our order, our stop limit order ahead of time. Or we can wait for a retracement if we're not sure. But it is very close and it's likely to get there. So right here, I see the low of this bar is actually set right at the low of the day, and the DPI would be the same as our entry price. Come down here, I see my direction did get outside of its neutral zone. We can also just glance at the tag on the y-axis, lets us know the value. So putting my order in at one tick below the low of the day helps protect me in case we just bounce off the low of the day, which can happen. The higher low of the day can always be a point of support or resistance. Always have the chance to bounce off, but our direction histogram gives us that confidence that we're going to continue just moving right through and at least hit our profit target, hopefully continue moving. And in this case, it would. For the breakout, we have an 8-tick profit target and a 15-tick stop. And we would manage it the same after we hit our profit target. The trade management of the runner is universal for all of the trade setups. So the only difference before that is some of our setups have a different target and stop. And I would like to clarify about this rule 4 here. Trade can be taken up to a maximum of 10 bars from the most recent turn bar, meaning no later than bar 10. So I have found this to be a point of confusion for some, and that they ask, well, I couldn't get in here, so can I get in on bar 7? As the low of the day is now at 1706.5, can I just put in 1706.4 and hop in? Not really, because the price only breaks through the low of the day once. We want to, and I like to say the established low, because while we do have a new low of the day here on bar 7, these bars are going to continue creating a new low of the day as each one plots. So it's not like we have a breakout here and then another breakout on bar 6, and another breakout. This is the breakout point. This is when it broke through this established low of the day. That only happens once for each established low. Not that it happens once a day, just for each established low. And then until the price reverses, we're just going to continue creating a new low of the day as each bar plots. So really, we don't want to enter a breakout if the bar that breaks through the higher low of the day is past bar 10. We found that after that becomes much more risky, and they tend to run out of steam if that's the one that breaks through. And then if we missed both of these entries, we come down here and we have a momentum entry. So now this isn't always going to happen, but there are quite a few times where we have multiple entries in case we miss one. We may have been watching another market or whatever, could be distracted very briefly and might have missed an entry and may not have been able to get a retracement. So let me briefly cover the divergence reversal rules. I see one that's almost qualified, so I just want to compare it and cover what we're looking for in a divergence reversal. So it would actually be this way. So our first clue is we're looking for a green or red dot. This is our first clue that a divergence reversal is on the horizon. They will often appear in the middle of a run, and when a turn bar plots, they'll stick to it. The next thing I check for that lets me know if I should continue looking for a divergence reversal is my super trend. If I look at rule 2, my super trend needs to be at minus 60 or below for a divergence reversal long, or outside of its extreme zone, this yellow area here. So at this point, it's not. So when I see this, I'm not really going to keep a closer eye on it. Then next, we are looking for the price bars to be plotting in the opposite direction of the blue line, or vice versa. Both really is the same thing. These numbers on the blue line keep track of this for you. They will start counting sequentially when the blue line is moving in the opposite direction of the current trend of the price bars. So the way to wrap rule 1 and 5 together, and along with the blue line, because we also need the blue line on the correct side of the histogram, is when this blue line gets to the correct side of the histogram on the turn bar, it needs to be, the number on the blue line needs to be between 5 and 10. So if we read rule 5, the lowest point of the Pro 9 line must be a minimum of 5 bars and a maximum of 10 bars back from the turn bar. So these numbers are just basically letting us know that 5 bars ago from this point, the blue line started moving in the opposite direction of the trend. So while this particular divergence isn't qualified because of our super trend, I did just want to point that out since we didn't have a good example of a qualified divergence reversal today. So, all right, we're coming up on the last half hour. So I do want to start going through some of these questions. There are quite a few people in class today, so there are a lot of questions. So is yesterday's training available? I missed it. Yep, those will all be posted. It's not up yet. It usually takes us about a week to process and upload the videos. But those can be found in the Academy Day Trading members area. Quinn W, are we still using NinjaTrader 7 or can we also use 8 now? If not, are we planning to use 8 soon? Yes, we are actually just finishing up with our version for NinjaTrader 8. We do want to make sure that uh, we work out all the issues, so we're rather than release it early and then just release another update a week or two later, uh, we want to do a better job of scanning and testing the indicators just to make sure that there's nothing going on. And I think it benefits everyone, you guys as well as, you don't have to go through any frustration or aggravation of something not working how it's supposed to. So we want to try to avoid all that uh, and be more thorough with our update releases. So it is on the way. I don't have a timeline on it, but we are very close to being done. Oh, a great question from Matthew K. Is there ever a momentum trade that you would not want to take? That is a great question. And yes, there are. Um, and it's not really a hard rule, but eventually, if a run goes on long enough, and if we look at this, if it goes on long enough and there have been a few momentum entries, the longer it goes on, the less likely I am to want to hop in on a momentum trade should I get stopped out. If I'm not already trailing my stop using the green DPI, eventually I know the run has to stop. It's got to end sometime. So, what that number is, it's whether it's the third or fourth momentum entry in a run, and you kind of just have to look at the other clues of the market. But generally, it's around the third or fourth one in a run. And we just have to accept the fact that sometimes we're going to take a momentum trade and the next bar is going to get stopped out. It's not any different from any other trade that gets stopped out. This is trading. We do know we're going to take losses. So it's one of those things we've been trying to find a way to tell when it's not as likely to be a successful momentum trade, but there's only so much you can discern from the markets. As for your other question, that is a great question, Matthew K. I don't have an answer for that off the top of my head. What is the percentage of runners versus stop outs on runners? That is a great question. So you may just want to email support and see if we can come up with that number for you. Quinn W again, what does the yellow bar represent? We'll see a yellow turn bar. This basically lets us know that our super trend rule is not qualified. So if the super trend is not outside of its neutral zone in the correct direction, meaning in the same direction as whatever the turn bar is, because this is a downward turn bar, we're looking for the trend to go down from here, but our super trend is green. So it's not outside of its neutral zone on the correct side. So our yellow turn bar warns us that this is not safe to enter. And also, if the turn bar does not touch the 50, so if either one of those qualifications are met, you'll see a yellow turn bar. White turn bars will always tell you that the super trend rule is qualified or that the turn bar touched the 50, meaning that we can disregard the super trend for that trade. And while looking at the charts, you may see a yellow DPI as well. This will tell you that your entry price is too close to the 200 EMA, and we shouldn't enter the trade. Joe K had a question. When you say our turn bar is our entry, do you mean the second white turn bar, or the DPI of that turn bar is the entry, or the DPI that creates the second turn bar is our entry? Please clarify. Thanks. All right, so really, when we're looking at trades, we're only really looking at what's happening right now. I only reference the previous turn bar in the cases of a single tier continuation, because that just tells you what kind of setup it'll be. If we see more turn bar or color bars in between these two, it's a single T. And then we know we should either look for the 200 EMA or the turn bar touching the 50. So we're always concerned with the most current turn bar or possible turn bar as our entry bar, as it will be the entry in the correct direction of the trend. Here we wouldn't be looking for an entry, and we'd be far past that as well. It really just helps us determine what type of setup we should look at. As right here, while this next bar is painting, we can see we may have a possible continuation, but we get another color bar. We can still have a possible continuation, and then we see our next color bar, and now we know we're looking for single T's. So that's really why we reference the previous turn bar in these cases, just so it helps us determine which type of trade it is and how and what rules we would need to qualify. All right, a question from Kwong. Can you show me how to change green histogram when it goes up and red when it goes down setting? Thanks. Yep, so if you want to change any of the indicator settings, you'll right-click on the chart, go to Indicators. These are all of the available indicators. All ours are Pro 9. These are all the standard indicators in NinjaTrader. These ones in the box below will be all the ones that are currently loaded on the chart. So if we want to change the super trend, just click so it's highlighted, and then down here, these are the colors. So you would change the above would be the green, this would be the red. Those are the ones you would need to change. And then you can change the color of the neutral zone, and for the direction, you can change the color of the purple line. And the blue line as well. So you can customize it. If there are some colors you see easier, feel free. And then once you make your changes, you just want to hit apply and then click OK. All right, Joe, I got your question about the retracement. Another question from Kwong, is there a maximum screen or windows opening at the same time for watching multiple trades? As far as I know, there's not a limit that NinjaTrader places on it. The only limit is really the computer and the processing power. As the more charts you have, the more processing power it's going to take. So eventually you're going to reach an upper limit and get a bit of slowdown. Great question from Mohammed. If I have two trade setups at the same time and entry price like this when you're showing, should that make it a stronger setup? So I go with the bigger stop loss and profit target, or should I go with the smallest trade setup for risk management, or use both as two independent trades? That is a great question, and we actually don't have a hard rule for that. That's really just kind of one of those things that's up for each trader to decide. As some people may not want to stack trades, Some people may feel more comfortable going with the smaller target and tighter stop. So, I mean, that's one of those things that's up to you. Uh, and it may be different on different days. I know sometimes, depending on how the market looks, uh, may influence how risky I feel for that particular trade setup. So, uh, I think it's one of those things you just kind of have to use the clues of the market. Either one is, I mean, if it qualifies as two different entries, either one is acceptable, really. Or if you want to enter them as two separate trades as well, that's totally up to you. A question from Ray. Are colors on the super trend the default colors, or you have customized them? My neutral zone is blue rather than a light brown. So you may just need to update your version of Pro 9. And you can swing by the ADT website to do that. David M. asks, why not do one above break even to cover the commissions? It will be, I think you're more likely to get stopped out with that type of stop right away. As even with break even, if we retrace just a couple of ticks, then the runner will get stopped out. So having it even closer, maybe, yeah, you may cover the initial commissions, but remember, after we are moving our runner to break even, we've either gotten a 6-tick profit target on 2 contracts or an 8-tick profit target on 2 contracts, depending on the type of trade it is. So we've already got profit and covered our commissions. So we really want to have that runner have as high a chance to go as far as possible. Ray, about some chart slowdown. Go ahead and send an email to support. We'll get you taken care of. After the new update should actually fix that for you. Joe K, great question. For the breakout trade, do you need both the blue line and the histogram to be above or below -50? Just the direction histogram. So, as I said before, these are actually an old set of rules. They have been recently updated, and I just haven't downloaded the new version. So this should say Pro 9 direction histogram is outside of the neutral zone. So, but typically, if you see anywhere where it's just the direction referenced, it's referring to the histogram, and the blue line is usually referred to as the Pro 9 line or the blue line. So, Harish, yes, if you do not have the purple line, you may have an older version. So you can stop by the website to download the current version. And then in the very near future, we're adding an update notification. So if it notices that you have an older version, it will tell you a newer version is available. Steve M. So are you saying that an established low or high is a minimum of 2 bars? Yeah, it can be. It can even be 1 bar. As we can break through the low of the day, and then it can just reverse and go back up, and then we have a new established low. So I really just use that term established low to point out that our entry point for the breakout is after we break through that first established low, and not after, while we're creating the new low as we continue to move down. So just to clear up any confusion so we don't have people trying to enter a breakout way down here where it's not a breakout, because we've already broken through the low and we're just continuing to move in that direction. All right, Larry J, at 9:24, my turn bar is yellow while yours is white. Also, I have a green EMA background for the two bars starting at 1014. Also, I have an up arrow at the 924 turn bar. All right, so you need to add 1 hour to make those Eastern. Uh, so this may happen, and I don't want, I know it can be a little unnerving to look at a chart and see quite a few things that look different, but remember, it could be 1 decimal point of difference of the information between your chart and my chart that could cause the uh, me to have a yellow turn bar and you to have a white turn bar, or vice versa. So unfortunately, there's not much we can do about it because these charts can only display the data they receive. And we could be, I don't know where you're located, but you could be, in the middle of the country. I'm out here in Las Vegas. So the way the data updates, we have a live and historical data. So they're separate feeds. And they may be routed through different servers. So, and especially if we're across different states, we're likely getting data routed different ways. So there may be a slight difference in the time when they update, that ours are not going to be completely synced. So you will see differences in charts when you compare them with someone else's. Not something to be alarmed about, just part of how it works. We've even had two computers in the same room on the same internet connection have different charts. Usually it's not too drastic, and we follow the rule, trade your charts. Trade the information available to you. You don't want to try to enter a trade on your chart using information from someone else's chart. It just works best. When in doubt, trade your charts. So occasionally, you might see that on someone else's chart, they had a winning trade, it was fully qualified, where on yours, it wasn't qualified and it was off by 1. Your super trend was at 19 and we needed it to be at 20. But on their chart, it's at 20. And that's just going to happen sometimes. The data feed technology, I mean, that's just where it is. So it's not something that we can do anything about, really. Oh, Deanna says, hallelujah, I love NT8 in regards to uh, our coming out with a version of NT8, or Pro 9 for NT8. I actually really like NinjaTrader 8 too. I thought they did a great job. Uh, it's a lot more streamlined, user-friendly, and intuitive. I think everyone is going to love it once they migrate over. Of course, NinjaTrader will be supporting NT7 for a while after, I imagine, but eventually you'll probably want to upgrade just because NT8 is, I think, a lot better. Quinn, if you are missing some uh, indicators on your charts, make sure that after you download an update, open a fresh chart and load a new template on it. What can happen with the updates is we release an update and we update some of our indicators. NinjaTrader is opening a workspace. This usually happens when you install an update and then open up NinjaTrader again. It opens all your workspaces. And you see them, they don't look right. They may look kind of funky, have indicators missing, because NinjaTrader is still trying to reference indicators from the previous version, and those have been updated or changed altogether, so the indicators it's looking for are no longer there. So when you download an update, if your charts don't look right on your workspaces, you just want to open a new chart, load a fresh template, and you may have to just open new charts and resave it as a workspace. but it's a pretty quick process. Harish, have you tested this concept? Just use the super trend. Go long when it changes from red to green with 8 tick initial profit and rest when it changes the direction or session closes. There'll be less trades, but less drawdown and all. I haven't actually tried that. Um, so I don't think that's something, it may have been when Todd was initially first developing the software, but I'm not too familiar with all the original iterations the software went through. But I know we like to have extra confirmation from our other indicators because it gives us extra confidence that the trade we're entering has a higher likelihood of succeeding. So we don't want to use any single indicator as a entry point because I just don't think there's enough information there. And William mentions, can you show your NQ? I lost all my turn bars on NQ. So I think something you can check. Right click on your chart, go to indicators. You want to find Pro9 turn bar. Make sure that this calculate on bar close is set to true. Just check that real quick, see if that does it. Sometimes when you load an update, it may kind of get a little funky, but that's one of the most common causes I've seen that for. Satish, how to change the size of the arrows. Again, you can find that in the indicator section. Just under momentum arrows. And Anita G, with the latest update, my turn bars down make a noise. I have tried to fix that, but I have been unsuccessful. How do I get the alert noise? That may, let's see. I know with the most recent update of Pro9 version 5, the turn bar alerts weren't functioning correctly. So that is being worked on and should be out in a new update. I'm not sure when that's coming out. Probably within a week, I would say. By the end of next week, I know we just wanted to add that feature that will notify you when you have an outdated version or when there's a new update. Rather than release one this week and then just another update next week, we're just going to wait a little bit longer. So for the time being, your turn bar alert sound may not work or may not work correctly. So you can come to the indicators section and you can turn your alert sounds off. So, and you'll just enable alerts true or false if they're acting kind of funky. Quinn W, does Pro9 Market News work on the new version chart? I believe you should have a news template. Yes. A couple more questions. NT8, Pro9 for NT8, not sure when that's coming out just yet. Should be pretty soon. Like I said before, we just want to do some double checking, make sure all our ducks are in a row, so we don't, release a version that may need to be corrected soon after that. So, Robert R, is there a way to change the high-low colors on the bar high and low? I've honestly never tried. Wrong one. I keep clicking the wrong one. There we go. Let's see. Yep. So just come to the indicators menu under the turn bar. Under high-low parameters, high-low text color, change that to whatever color you like, and you can actually change the size as well if you want it a bit bigger or smaller. So a lot of the indicators you can kind of tweak to get to your liking. You just have to spend some time changing them. And don't worry if you change something you don't like and you can't figure out how to get it. You can just reload the template you loaded and it'll return to the original format. If you customize your indicators and want to keep it that way, after you get all your settings and you get the chart to look how you like with all the any color customization or something like that, right-click on your chart, come down to Templates, Save As, and then just name it, you know, something like Pro9 Trader Custom, or you can your name Pro9 Trader, you know, whatever you want to name, so you know it's a custom chart for you, and that way you also have the original chart to revert back to if you want to try to experiment. JR is asking, what template gives me all the right buy and sell signals? This chart, this is the Pro9 Trader template. This will let you identify all 6 of the trade setups from this one chart. Joe, you're very welcome. I do enjoy teaching Pro9. I love this program, so glad you guys enjoy it. I hope everyone learned something. And also, if you guys ever had feedback or you think there's something we can improve upon, some information we can include that would make the training more beneficial to newer members, especially if you've been with Pro9 for a while, do let us know. We would like to hear that. We're always, especially, I'm always wanting to improve and make this the best training possible for you guys. Oh, JR was just kidding me. All right, I see. What template gives me all the right buy and sell signals? All right. Harish, yeah, the indicators are not included in the strategy setup. I don't know much about that or programming your own strategy with the indicators. That's a little outside of my scope. So they may be in future versions. I'm not sure. All right, looks like I got all the questions. So I feel like this flows a bit better, or if I focus on trades for the first hour and then get to the questions, it does seem to flow a little bit better and we can stay on subject. I know sometimes trying to teach and then cover questions kind of gets off on tangents. So if there are any more questions, now would be the time. We got about 5 minutes left, 7 minutes. So any questions until tomorrow? We will be back tomorrow. I am going to try to set up some market replay tomorrow so we can actually walk through some live charts and simulate some trades as though we were real time. We'll pick a random day and I'll set that up. And then we can kind of go through and see how we can anticipate some of these trade setups, as I think that's something that's not always immediately apparent to people, especially when you're new with this system, is how can we anticipate the trade setups before the bar closes. We won't always be able to, but there are ways and ideal situations where we can do that, so hopefully we'll get to cover that tomorrow with the market replay, as it's very helpful and can help us be ahead of the game. So we could be the first one on the train out of the station rather than that person chasing after the train hopping on the caboose. Mo S. did not answer your question. Let me see. So Mo, the Pro9 Core rules will appear in the master rules if you purchase Pro9 Core. So if you have and you don't see the rules, send an email to support and we'll get you squared away. Kwong T, great question. Are there time windows of trading that we can trade and avoid? Besides news, we don't really have a hard rule. because a lot of traders, we're all different. Some like to sit out during lunch, the lunch hour, or an hour, hour and a half during lunchtime. Um, some like to trade for the first hour, 2 hours of the day. So we don't really have any like hard windows of time that we've noticed are better or worse over the long run. So it may be, when markets go through their cycles, sometimes they get slow, sometimes the lunch hour gets extremely slow, uh, that type of thing. But it's kind of something you just have to feel out for yourself as you watch more trades, watch more charts, and just notice how the markets start to move. And you'll be able to tell, like CL has been pretty slow and choppy. Decent today, but looks like, yeah, so could have got on this run, but if we look at yesterday during market hours, CL was kind of rough. And, same with the previous day, not a ton of movement. Uh, and markets are going to do that. Mike E, how do you stop the trades from printing on the chart? You'll just want to right click on the chart, go to data series, scroll down to the bottom, and these plot executions, you'll just want to set those to do not plot and hit OK, and it'll remove all those. I know those can kind of can bog the chart down if you enter in quite a few trades. Joe K, yeah, the core was a separate add-on. Fairland B, can you enter a trade using the DPI on the turn bar or the next colored bar? Either one is an acceptable entry price. Ideally, you would want to enter on the turn bar if the trade is qualified on the turn bar. If we can't enter on that DPI price, we can use the DPI price that creates the next color bar. And also very important before we go, kind of a last note, very important to use stop limit orders. So if you're in NinjaTrader with the DOM, which is what I'm most familiar with, you press in your mouse wheel to enter a stop limit order. Lets us enter our order, and it won't be filled until that price is reached. So I'm not sure how to do that with ChartTrader. I think you just have to change the setting, but I'm sure NinjaTrader has documentation on that. All right, everyone. Thank you for joining me. Looks like I got all the questions answered. So if there's any more, you can go ahead and shoot an email to support, and we'll get that as soon as we can. Thank you all for joining me. I hope you all learned something. Thank you for the great questions today. Until tomorrow, I hope the rest of your trading day goes well. May the EMAs always be at your back, and happy trading.